Welcome to today's episode of the Crypto Deep Dive. Joining me again is Alex. Before we start, a quick one for you, our listeners. If you find the information we share useful, please do click the like button, subscribe, and hit the notification bell. Let's take a quick look at the markets. Bitcoin is currently up to around $91,256. Okay, Ethereum is sitting at about USD 1,700. XRP is at 2.1563. Then we've got XLM at just under 26 cents. Sol is at $145, and ADA is trading at 65.5 cents. Right, Alex, you're sharing some really intriguing material with us today.
It's quite a mix, isn't it?
Definitely. We're trying to cut through the noise, really understand the potential economic ripples, pardon the pun, from a few key things. It's a macro-heavy episode again. There's this rumored U.S. secret fund, the ongoing, let's say, tension between President Trump and Fed Chair
That's
Powell.
certainly making headlines.
And these new tariffs on solar panels, big ones.
Very big. So the mission, I guess, is to figure out what this all means for the economy overall, but also...
for individuals. Like, how does it hit your disposable income? Your ability to invest, maybe even in riskier things like crypto?
Absolutely. We've got that video of Jim Rickards talking about a huge $150 trillion secret fund.
Sounds almost unbelievable.
It does link to some historical stuff. And then a major British news media outlet reports on Trump really going after Powell on interest rates, calling him a major loser for not lowering interest rates.
Yeah, I saw some of that.
And another piece on those solar tariffs. Huge numbers coming out of Southeast Asia.
Okay, let's dive in. Right.
Let's start with that secret fund. The discussion you mentioned brings up this idea, apparently from Jim Rickards, of a trust set up way back in 1873 by members of Congress, other big players.
1873. Wow. So what's the significance? Is it like historical trivia or is there more to it?
Well, it is compared to black budget funding. You know, money for secret projects off the official books.
Okay, I follow classified stuff.
Exactly. And it is suggested, you know, of there being a history of maybe trillions kind of being funneled into hidden accounts over time.
Trillions, that's a lot.
It is. But the really interesting bit, the hook, is the idea that this fund could be injected back into the American economy.
Like a massive stimulus.
A huge injection of liquidity. Yeah. So for you listening, the takeaway is the sheer potential scale we're talking about here, even if it's just rumor, a possible massive flood of cash.
Okay, that's where it gets really interesting, doesn't it? Just think what that kind of money could do.
Right. It could theoretically, you know, juice the whole system, maybe even lead to lower interest rates.
Which is exactly what Trump wants Powell to do, right? We'll get to that.
Exactly. There's even this, well, highly optimistic mention of it potentially making every American a millionaire.
Okay, let's maybe park that one. What's a more grounded potential impact?
Yeah. The more, let's say, plausible angle discussed is using this fund to tackle debt, global debt, U.S. debt.
Okay, that makes a bit more sense.
And that connects to this wider theme about a possible shift towards like a gold-backed digital system.
So digital money tied to gold for stability.
That seems to be an idea. It points towards a potential, you know, fundamental change in how the whole financial system works.
We should definitely pick that idea up again in another episode. So putting that whole fund discussion together, what's the main feeling?
I think the overall sentiment for parts of the community is that something big is happening. A significant wealth transfer, a shift towards digital, maybe commodity-backed money. It seems some feel this shift is underway, whether this specific fund is real or not.
Right, so for listeners, it's that feeling of potential major financial restructuring ahead. Got it.
Okay, let's pivot. Let's talk about the reports on Trump versus Powell. It sounds like it's really heating up.
Yeah, the language seems pretty sharp.
It is. Trump apparently used social media, called Powell a major loser. Ouch.
Wow, why? Because he didn't lower interest rates.
That's the core of it, yeah. Trump seems to think Powell should have cut rates sooner, you know, to boost the economy preemptively. He's saying Powell is too slow, basically, worried about the economy slowing down.
And the timing of these attacks, as we've all seen, they coincide with stock market dips and recession fears.
Exactly. Which is kind of ironic because some of those fears are linked to his own tariff plan.
Right. The interconnectedness of it all. So how did the markets react to him doubling down on criticizing Powell?
Not well. Plunges in the S&P 500, the Dow, the Nasdaq, even the U.S. dollar weakened.
Okay, so general market jitters, that's maybe expected.
But here's the weird part. U.S. government bonds, usually a safe place to park money when things get choppy.
Damn, they went up.
No, their interest rates rose. Which is unusual. It suggests maybe a deeper unease, not just about stocks, but maybe about U.S. economic stability overall.
And gold, because that moves.
Oh yeah, shut up. New all-time high reported over $3,500 an ounce.
Wow. So classic flight to safety, people getting nervous.
Definitely seeking that perceived stability. Gold's the traditional go-to.
Any other opinions you have picked up on this topic?
Indeed. Some raised an interesting point. The Fed might still need to inject liquidity later, even if inflation cools off.
But wouldn't that risk reigniting inflation?
That's the worry. A potential catch-22 for the Fed down the road: support the economy, risk inflation, or fight inflation, risk a deeper slowdown.
Right, makes sense. Okay, let's shift gears again. These new solar panel tariffs we got reports on, they sound pretty dramatic.
They really are. The Commerce Department announced tariffs, get this, up to 3,521%.
3,000 on panels from where?
Cambodia, Thailand, Malaysia, and Vietnam.
Why so high? What's the justification?
The official reason is alleged subsidies from China and accusations of dumping products below cost on the U.S. market. This came after a year-long investigation pushed by U.S. solar manufacturers.
Okay, so for people listening, the big immediate thing is solar panels are likely to get much more expensive.
That's the most direct impact, yes. A potential sharp increase in cost.
And the rates vary. Cambodia got hit hardest.
Yeah, Cambodia faces the highest duties. Some Chinese companies operating in Malaysia got lower rates, interestingly.
What does that suggest? Companies moving production around?
It highlights how complex global trade is and how companies try to, navigate these trade barriers. Maybe reflecting supply chains already adjusted from previous tariffs.
So who wins here? U.S. manufacturers, presumably.
The American Alliance for Solar Manufacturing Trade Committee certainly sees it as a win. Yeah, a victory for American manufacturing, they called it.
But the downside? For others.
Well, just think of businesses and consumers who've benefited from cheaper imports so far. They're likely looking at extra costs.
And these imports are significant.
Huge. Almost $12 billion worth from just those 4 countries in 2023. So yeah, the impact on solar project costs could be pretty widespread.
And these are on top of existing tariffs.
That's right. Add them to the tariffs from the Trump administration. We have already heard that total tariffs on some Chinese goods could hit like 245%.
That's enormous. How is China reacting?
Predictably not well. Reports say they've hit back with a 125% tax on some U.S. products, and they vowed to fight to the end.
So potential trade war escalation.
That's the risk. Definitely something to watch. It could spill over into lots of areas.
And the timing. Yeah. Didn't President Xi just visit those Southeast Asian countries?
He did. Vietnam, Malaysia, Cambodia. The trip was seen as boosting ties, pushing back against what China calls U.S. unilateral bullying.
So it all feels very geopolitical.
It definitely suggests a bigger strategic game being played out through trade policy.
And to circle back on our core interest, tariffs causing market pain too, and are impacting crypto.
Yeah, it is noted that tariffs add to the uncertainty disrupting things. Said the lack of full resolution with China impacts price action everywhere, crypto included. So it's not just about the price of solar panels.
Right, the ripple effects. Okay, let's try and pull these threads together. The secret fund rumors, the Trump-Powell fight, these massive tariffs. What's the combined effect on the economy?
It's a potent mix of uncertainty, isn't it? The fund idea, even as speculation, could create volatility. People might expect inflation or deflation depending on what they believe.
And the Trump-Powell situation?
That definitely fuels market instability. Investor nervousness could slow down growth if Trump's worries are right, or if Fed independence gets undermined. Likely higher costs, especially in renewables, could add to inflation. And the bigger picture is escalating trade tensions hurting global growth overall.
Well, let's make it personal. How does this potentially hit individuals, their money, their ability to invest, especially in riskier things like crypto? We know retail investors are a big part of that market.
Well, it's pretty direct if tariffs mean higher prices for goods.
Like solar panels, but maybe other things eventually?
Potentially, yeah. That eats into your disposable income. Less money left over for saving or investing. Then add the general economic uncertainty, the Trump-Powell clashes, the trade tensions. It makes people nervous, more risk-averse.
So, less willing to gamble on something volatile like crypto.
Exactly, so for you listening, it's potentially a double whammy. Less actual cash available to invest, and maybe less appetite to put that cash into higher risk assets.
That makes total sense. If you're paying more for basics and worried about the economy, crypto might seem like a luxury risk you can't afford.
Precisely. On the flip side, though, if people do have some dry powder on the side, there might be amazing opportunities if timed right. No financial advice. Only sharing my personal thoughts for entertainment purposes only.
So wrapping this up, looking at all these pieces, the potential secret money injection, the fight over interest rates, the trade barriers, it paints a really complex, maybe challenging picture.
Definitely dynamic. For you listening, the key things to track are probably shifts in inflation, how stable the markets feel, and ultimately, how much discretionary income you actually have.
Because higher costs from tariffs, plus the general uncertainty that could squeeze budgets but maybe make people more inaudible as investors if played right.
That seems like a very real possibility. It could temper that appetite for risk significantly.
So this deep dive really raises some important questions for everyone to think about. How will these policies really affect the price of things I buy every day?
And what investment strategies even make sense in this kind of environment? Are there more resilient options?
And just how closely do I need to follow what's happening with trade deals in the Fed?
Absolutely. Staying informed about these undercurrents feels pretty crucial right now. The global financial system it's complicated.
We hope this exploration has maybe given you a clearer view of some of the forces at play. Thanks for bringing these topics to us.
Yeah, lots to unpack there.
Indeed. Thanks for diving deep with us. If you like the content, please hit the like button, subscribe to the channel, and hit the notification bell.
Thanks, Lori. It's been fun again. Thanks everyone for listening. Until next time.